Hello, it's Robert Miner with Dynamic Traders Group with this week's relatively short video for our YouTube followers and subscribers and Twitter followers. I haven't done one of these videos in at least 2 to 3 weeks, so I'm going to catch up on a couple of the markets that we talk about quite a bit in this video this week, and that is the gold market and the S&P market, because I think they're coming into a very interesting position. One, I want to catch up from prior videos and then alert you for a potential trade in each of these markets just next week. And they might be more than just a short-term trade, by the way. So pay attention. If you like what you learn here and what you hear, be sure and like us down below and subscribe so you get notified when I put the next video up. You know what to do. Okay, that's it. Let's get started with gold. So this is a gold daily data. It's the closing data. I like to always look at both the intraday bars, the full daily bars, and the closing data as well. Closing data helps to get rid of some of that kind of volatility, makes the picture a little bit clearer of the position of a market, at least when we're looking at a chart. So this is the daily closing data. If you'll remember from a couple, 3 weeks ago on the videos that I did, we're looking for what we call a weekly high in gold that was made pretty much right on time in early May, and it's been net bearish ever since then, as anticipated. Let's look at where we're at right now as of the end of the day, Friday on the 26th. Is this decline looks very clearly like a 1, 2, 3, 4, 5. Now, I'm going to throw in some Elliott wave terms here. I don't have the time to explain them in detail, but a 5-wave impulsive trend is usually a trend in the direction of the higher time frame. And usually a correction is not complete on a 5-wave impulse type of trend. So what does that tell us? That tells us that more than likely this decline is only part of a higher time frame correction. Now I'm looking for probably in the next week for gold and silver and the GDX to make what we call a weekly low. That'd be a low that lasts for 2 or 3 weeks or so. But if it does do that, just keep in mind that that low should be temporary, and any advance should be a correction, and then a continuation of the bear trend, probably into at least early July, if not into August or so. So again, 5 waves down, we're in a position to complete the wave 5. I look at our daily momentum cycles to help identify when a trend like this is complete. So the next daily momentum bull reversal should complete that low, and it'll probably be a weekly low that'll last for 2 or 3 weeks and complete a 5-wave decline. Be very tradable on the upside, but for a relatively short-term trade, because probably this will be a wave A. We'll have a 2 or 3 week rally, it'll be a wave B, and then we'd have a wave C of some sort or another, or maybe some kind of correction other than an A, B, C. But the takeaway here is we made the reversal right on time, been net bearish as anticipated, and now we've come into a position from where at least a temporary low is likely. So great trade opportunity. Longer term trade opportunity should be in a few weeks, probably any time from around early to July to late August. I know it's a really wide time span, but that's when we're going to be looking to tighten up on the time and price targets to complete more than likely. Let's go to the weekly. This is gold weekly, to complete a higher time frame correction, which will be a wave 2, and then followed by another probably very significant bull trend. That's not likely to begin prior to, let's say, the middle of July or so. Okay, let's take a look at the S&P. So this is the SPX weekly data. By the way, almost all of the major stock indexes are in basically the same position. So this is the weekly data right up through last Friday, the 26th, which was yesterday. If you watch some of the earlier videos from 3 or 4 weeks ago, you'll know that I'd been anticipating that the SPX and the other indexes were coming into a position to complete a weekly high. That'd be a high that lasts for several weeks and potentially several months. And then on this week ending Friday, May 5th, we made what we call bear reversal week. That was the week of the last Fed announcements and the job report. and our weekly momentum cycle was overbought. So it looked like it was in a position to complete this weekly high. So what happens when a market gets in, notice my language, in a position to complete a high or a low or breakout and that sort of thing? Well, the first thing you have to do, again, remember, I'm always taking all of this from the perspective of someone who actually trades. I don't care about being a forecaster. I want to make trade decisions that are profitable. So we're in a position as of early May to complete a weekly high. Then we have to go down a time frame to look at what can the market do to signal that that high should be complete. And I call those usually anyway a pattern reversal signal. It has to break, in this case, the bullish pattern. And when it breaks the bullish pattern, I rely a lot on Elliott wave and just also some common sense, then it's in a position to develop a specific trade strategy. In this case, it would be a specific go short strategy. Well, the SPX never made that reversal. So here we are in early May. This was that week of the Fed announcement right here. This is daily data, of course. Came up sideways for almost 2 weeks, and then we came to a new high. So the signal here, the pattern reversal signal, would have been a close below 4109.90. That was the last swing low close. If the SPX had closed below that, it would have broken the bullish pattern. Well, it never did that, so we never got triggered into a short, at least during this period of time. And now what do we have this past few days, including the big up day on Friday, is this is what I told our subscribers last Wednesday, and that is, should the SPX make a new high in the days to come, is that we'd be looking at this as an ending diagonal. And boy, that's a really, really reliable pattern that completes a higher time frame pattern. What do we mean by ending diagonal? Well, first of all, we emphasize the word ending. Ending means it's the final section in a higher time frame trend. In this case, the final section from the advance from the March low. So we're in a position, or coming into an extreme position, with a really, really high probability pattern position to complete at least the advance from the March low. It's probably a higher time frame advance, but let's just take it, one section at a time. So what's an ending diagonal? An ending diagonal typically is 5 sections, just like an impulse trend. It's the last section, group of sections, of a higher time frame trend, and it goes to a new extreme, then overlaps, new extreme and overlap. What do I mean by that? Well, from this low on May 4th, a little advance, sideways correction, and then an advance to a new high, and then a correction that came back and traded in the range of this initial advance. I call that an overlap, and I always consider overlaps with closing data. So section up, correction, new high, and the new high is important, correction, overlap, and then typically there's one more new high to complete this 5-wave ending diagonal. So I don't know what's the S&P is going to do next week. We know Monday is a holiday in the United States, won't be trading, but I would anticipate another day or two of net bullish trend with the SPX and the other indexes, which should complete this ending diagonal and the entire advance off of the March high. This is a real reliable signal. Nothing's 100%, but this is really, it looks like it's coming into that ideal position, so be aware of that. And more than likely, we all know about this debt ceiling controversy that's going on, and this Friday big update was because, quote unquote, it looks like they're going to have an agreement on it. Well, I give it a 99% chance that next week they're going to come to an agreement. No one's going to be happy with the agreement, but they'll come to an agreement. And that's what we call buy the news, sell the fact. So buy the news on the anticipation of an agreement. When the agreement's made, whatever it is, more than likely it's going to have a bearish reaction to it. And that's what the market is telling us is probably going to happen. So the ideal would be another day or two on the upside, and then we complete this ending diagonal. More than likely, the extreme on the upside should be around 42.80. That's the 162% external retracement of what I have labeled the wave 4. This is the 100% alternate price projection of the prior major advance, which I called a wave C, projected from this wave D low. Don't know how to go over that, don't have the time to go over that now. But that's what I'm looking for, potentially a really significant opportunity on the short side. You can short futures or use options. I don't use options, don't recommend those unless you've got some really good training and experience with them. And then there's ETFs, both dollar for dollar unleveraged bear ETFs or leveraged bear ETFs you can consider. So let's look at that in this coming week. Ideally around 42.40 up to 42.80 will be the maximum upside. And what we want to be looking for is any sort of reversal signal. Again, ending diagonal, stress on the ending, the final section of a higher time frame trend. That's what we'll be looking for. I hope if you like what you learned here and what we're looking at, you might think about our DT reports, because we update this 3 times a week in our DT reports. So check those out at dynamictraders.com. Well, that's it for today, my friends. Thanks for listening. Thanks for checking in. And be prepared for the gold and the S&P this coming week. I think there's some great trade opportunities coming up. And remember, though, you want to have the trigger to get you into the trade, and you always want to use proper position sizing. We'll talk about those another time also. If you like what you learned, check us out at dynamictraders.com. Thanks a lot for checking in. Robert Miner, over and out for now.